So let me, I trust you can hear me well, and also I will try to manage to project my presentation. Let me, yo creo que, I think I need someone to help me, please. And let me, can you see the PowerPoint now?
Yes.
Yeah, all right, thank you very much. So let me start. I will walk you through a PowerPoint presentation. I thought I didn't need it. I was thinking actually in talking probably 10 minutes or 15 minutes, but since it's a webinar and I think you are more interested in learning and how we structure the bond and what are the policy decisions behind, probably I will go through this PowerPoint presentation. I will present at first what were the public policy decisions that we took and what were the decisions that we made in order to engage in this track of issuing an SDG sovereign bond. And then I will talk about the unique features and characteristics of the bonds. Why was this bond highly recognized in the world? I will go through I will describe the framework, and then finally, well, I will tell you some reflections and what is the sustainable agenda that we're pushing and pushing forward from the Ministry of Finance. So let me start giving you, as I said, I mean, and probably as Evil, I hope I said right your name, Evely, said an introduction. Before I went to Georgetown, actually I was working in a development bank here in Mexico. Before that, I was the debt manager of Mexico City. So most of my experience before moving to Washington was practically on financial issues. But then when I graduated from Georgetown, I joined the World Bank, specifically the Governance Global Practice. At the time, I was a public sector specialist, and I worked a lot of public sector issues, such as public investment management, public financial management, but specifically I work a lot with projects related to reinforcing or improving debt management offices especially in Latin America. So I work a lot in Colombia, Peru, probably most of the islands in the Caribbean countries, with Uruguay, but also I was working with the debt management office in Portugal and in Mongolia. And one of the lessons learned in the World Bank was that the need of the ministries of finance to get involved in sustainable issues. Most of all around the world, probably most of environmental projects, environmental policy is practically led by the environmental authorities, and then they define public policy. But at some point, they have to start a dialogue with the ministries of finance that control the budget, that appropriate the budget, but also that have a strong influence or an important take in the financial sector, specifically as a regulatory authorities. So one of the lessons learned is that the ministries of finance need to be involved in all the environmental, sustainable, and social policies from the very beginning in order to assure that these policies are going to be implemented adequately. Not because we are the experts from the Ministry of Finance, but because we play an important role in several aspects of the policies. So when I was invited to join the current administration, I was invited to join as to be the debt management of Mexico, the debt manager of Mexico. So I joined the Public Credit Office. And one of the first questions that we made ourselves was, should be trying to expand the investor base for Mexico. This is very important because Mexico has a considerable size. Once we tap the markets, we have tickets, very high tickets. For example, we tap the market with probably 1.5 to between 1.5 and 2.5 billion US dollars per year. We tap the most liquid markets, the euros, dollar markets, and also the samurai market, very beginning in the year. And so we need markets that have enough size for our tickets. So at some point, Mexico issued probably we issue Swiss francs bonds in Switzerland. We issue also some bonds in sterling pounds in UK. And there were some discussions about if we should be probably trying to expand our investor base in other countries, such as China, for example, with a Panda bond. We were exploring if we should also try to tap the Aussie market in Australia. The World Bank was very experienced in doing that. But when we started to do a market analysis from the very financial perspective, and I'm not talking here about sustainability policy right now, we found out that the sustainable funds were practically the funds that were growing the faster. And right now, there are around 3,000 sustainable funds around the world. They manage $8 trillion US, and practically most of them are concentrated in Europe. So it seems for us that if we wanted to expand the investors' base, we could do it very easily through a sustainable bond in the most liquid markets. And that was practically one of the financial decisions that we took. Obviously, the second question is, are we prepared to issue a sustainable bond? And then we entered into the public policy discussions related to sustainability. So the first decision was, yes, we want to expand the investors base, and we can do it fast through the sustainable market. And when we review what was the policy track in Mexico related to environmental policies, but also to social policies, Mexico was already engaged in an environmental and a green climate agenda. Around 29, Mexico signed the Green Climate Fund at the COP16, and then we enacted some laws in order to implement these reforms. We introduced a carbon tax. Right now, we have a carbon tax on a specific excise, close to excise taxes. And then there were some green and social bond issuance around 2015 up to now. No, I will enter into those details after. Now, what we saw also is that Mexico is a very unequal country. We have high disparities between the country. We have practically, for the most simple measure of poverty, 1 of 2 Mexicans live in poverty, and that's practically is not in line with the level of development of the country. So we are experiencing actually a lot of social gaps that practically refrain sustainable growth in the long run. So we thought that instead of trying to see if we should be issuing a green bond or a social bond, probably we should be pushing for a sustainable bond that comprises the 2 mix of the policies, the social criteria and the environmental criteria. And Mexico has already a track that wasn't converging on those 2 policies. I mean, we have separate tracks, but we didn't actually put them together in a sustainable approach. Now, around 2019, Mexico signed the Agenda 2030, which is linked to the SDGs of the UNDP. The Sustainable Development Goals are actually a mix of policies, of green policies, environmental policies, and social policies, highly focused on closing social gaps. One of the things that we were also analyzing for Mexico during the administration was practically Mexico reflects a high disparity in terms of human development or sustainable development. For those that are not familiar with how Mexico looks, I mean, we have a nice map there. But if you see there, probably the north is practically high developed, while the southern part of the country is less developed. But if you compare in terms of human development index, we have some municipalities like Benito Juárez in Mexico City that can be compared to some some regions in Switzerland, while other countries, probably in Oaxaca or Guerrero, can be compared to some regions in sub-Saharan Africa. So this is a very worrisome thing, because if you think in Mexico as a federation, the joint of all the states should be trying, at least from the economic perspective, not talking about political perspective, from the economical perspective, we should be expecting that all the states should be converging at the same rate of growth. And that's not happening in Mexico. So GDP per capita in the southern part of Mexico practically is diverging instead of converging to the rest of the countries. And so that's why we are talking a lot about probably the story of 2 continents in just 1 country. So we have high disparities. And this administration decided that the priority should be to close all social gaps as possible. So we are talking about poverty, hunger, gender gaps, financial inclusion here. Then when we decided probably that we should, the third element that was taken into consideration to issue a sustainable bond was that, and let me open a parenthesis here. Debt management is not only about funding government expenditures. No, we have another crucial role that is more devoted to the development of markets. So, for example, if you are not familiar with portfolio theory, which usually a sovereign bond is considered as a zero risk instrument, and that serves as reference for other instruments or other bonds that will be issued in the market. For example, a private corporate, any private firm can issue a bond. It has certain risk, and it will take a reference, the zero risk instrument, which is a sovereign bond. It is considered zero risk. So one of our roles is that we have to build a curve, a yield curve, in different markets in order for other firms, either public or private, to tap the market and use those reference to issue their own bonds and for their funding programs. So it's very important for us as a government, as a sovereign, to reach a very low cost once we issue one of those reference. So from the very beginning of the year, Mexico traditionally opens the market in the U.S. market and then in the Euro market. We go to the market, we issue a bond denominated in U.S. dollars. We do it with an auction, and then we try to reach the lowest price as possible. After that, all the public firms and all the private firms follow our issuance, and they issue their own bonds, so they can complete their funding programs. So the first step is the sovereign issues the bond, and then the private and the public corporates issue their own bonds. In the case of the sustainable financing bonds, it was the other way. It was working on the other way. What we saw is probably two of our development banks in Mexico issue a green bond and then a sustainable, NAFIN and Banobras. Then in 2017, Mexico City issued a green bond and Rotoplas issued a sustainable bond. And then two corporates, one private corporate, Vinte, and one private bank, BBVA, issue sustainable bonds. And the sovereign hasn't issued any sovereign bond to serve as reference. So it was working the other way around, and we decided that the sovereign should be starting to put sustainable reference in the markets. No? And so that was the last element of the decision that we took in order to engage in the structure of an SDG bond. So let me walk you through why the sovereign bond framework is unique. We started this discussion a year ago. It took us probably a year to build a framework. You have to build a framework in order to present how the bond is going to be structured and what is the commitment with the investors. We decided to issue the bond denominated in euros. So we went to the euro market probably late in February, and we presented the framework. We worked around 6 to 7 months in trying to build the framework, and then to concede with all the line ministers involved in the budget, all the agencies. So we have a lot of meetings with the Office of the President, who is in charge of the Agenda 2030, and all the line ministries in order to align the framework and that they feel comfortable with what were the commitments that we were taking or that we were going to take with the investors. So the first, very quickly, to the first city that we visited were the Netherlands in February 24. We met with insurance companies, we met with banks, with development banks, and also we met with a lot of hedge funds that are situated in the Nordic countries. Most of the Nordic countries are the ones that have most of the sustainable funds. Then we traveled to Munich and Frankfurt. We presented there also the framework. But we went to France and Paris and UK in London in UK, and then we went back to Helsinki and Copenhagen to present the framework. It was pretty much well received. And also these roadshows are useful to receive feedback from the investors and to know what would be the appetite for the bond. No, practically, it's a selling activity, it's a marketing activity. So my team included here a nice picture of us, if you allow me to say that. But this is the Mexican delegation with the banks that structure the fund. The banks, most of them are French. Natixis was the green coordinator, and then we invited Crédit Agricole and BNP Paribas to join the transaction. So we have 3 French banks working on the structure of the issuances and presenting this bond to the investors. What is important is if you see a guy there in the right side with a blue tie, he's from the UNDP. He went with us to the roadshow, and they were accompanying all the transactions. The role of the UNDP during the structuring of the bond was very important, because in order to issue a sustainable one, we need a third party opinion. And the UNDP wasn't that third party. We hired a specialized consulting firm, very highly recognized, called Vigio Eris. But we asked the UNDP to provide an opinion about the alignment of the budget with the SDGs proposed by the UNDP. So it was very important that they provided that opinion, because linking the bond to the SDG bond, goals was crucial in order to transmit to the investors the priorities of the government, and how the budget was linked to all these SDGs. So this opinion was very important, and it helped a lot in selling the bond to the investors. Now let me get into the unique features of the bond and why this bond has been highly recognized around the world. First of all, well, the title is wrong here, yeah. I'm sorry for that. But what I wanted to say is that what is behind the framework is that we have a very solid and robust governance monitoring the Agenda 2030. The government of Mexico, specifically from the Office of the President, we have a specific office devoted for monitoring and evaluating the SDGs of the Agenda 2030. So we have a national council there of the 2030 Agenda for Sustainable Development. I think 1 week ago or 2 weeks ago, we have the first council for this year. In this council participates all the line ministries of the government of Mexico. Obviously, the Ministry of Finance also participates there. At the beginning, we were invited, obviously, because we are responsible for some of the SDGs, but also because we are responsible for the budget. But there was a special unique feature of the Ministry of Finance that we weren't discussing, we weren't contributing here, and is that we have an important take on regulating the financial sector, and we have an important take in mobilizing capital in the markets. So we decided that we should be participating more actively here and trying to implement or to streamline ESG's criteria in the financial sector. I will address that later. Also, the INEGI, which is our statistical institute, participates there because they have created a very nice IT platform to monitor the SDGs, not only at the federal government, but also the subnational government. And this 2030 Agenda Office also devotes a lot of time to coordinate with private sector in order for the private sector to also link their sustainable policies to the SDGs. So we have a very robust governance, and this was reflected on the framework. When we discussed this with investors, I mean, it was very well taken. This is important because there are only 3 sustainable bonds in the world. The first one was issued by South Korea, and the second by Luxembourg. These 2 bonds are sustainable because of the linkage to the SDGs, sustainable SDGs, but they need to report ex post how the expenditures were devoted for specific projects. This framework allows Mexico to ex ante present to the investors what are the projects, what is the budget, and then we will ex post issue an impact report for the investors. So this is why this is a unique feature of the framework that was very well perceived by the investors. The second feature, I think, we included 6 filters in order to filter what would be the eligible sustainable expenditures. So let me walk you through these filters, because most of them are already in place in the Mexican law, but the other ones were adopted in order for the SDG to be implemented. So we have the budget approved each year, no? So it's the upper line, the bulk of the Mexican budget line items. We have a lot of items there, but we have a specific rule in order to issue debt in Mexico, and it's a hard constraint actually. In other countries, you can, for example, United States, each time, for example, they need more debt, like when they receive an external shock, they have access to the market. Actually, they have the market. They issue more bonds, and they don't need an authorization for Congress, but also they don't need to explain or to link debt to a specific, they don't need to link the specifics of the debt proceeds to a specific use. Now, in Mexico, we have something that could be interpreted as a golden rule, and it's at the level of the Constitution. So in the Constitution, Mexico says that each time you issue debt, it has to be linked to for the creation of an asset. It has an old wording, old Spanish wording there. It's called like public works, but it has been interpreted as infrastructure. So that has to be devoted only for infrastructure at the constitutional level. So that's the first filter that you see there in the presentation. So we only include budget items, line items that are productive or that can be considered investment projects. That in Mexico cannot be used for current expenditures or other things that are not investment. The second filter was the budget line items should have at least one contribution to the SDG, or should be linked to at least one SDG. Some of the line items can be linked to one or two SDGs, or can have an indirect impact on one of the SDGs. But the good thing in Mexico is that we have a budget that is detailed by programs and activities, and these programs and activities are linked to a specific SDG. And that's one of the things that facilitated the selling of the bond, and actually the monitoring and potentially the report of the impact report of the bond. So we choose only those items that were assigned with a specific SDG. Also, obviously, we can include other items that can have two SDGs, but at least it should have one SDG. No? The third filter is we only include those items that are linked to an SDG, but also have operational guidelines, or that they have a specific policies in place. What happens sometimes in some budgets is that you have the budget line, but you don't have the policy yet. You're still designing the policy, or you can have the budget line, but you are still building the guidelines. So we run out we take out those specific budget lines, and we only leave those with guidelines and operational guidelines and policies in place. Then the fourth filter is to remove negative spillovers. All of those budget lines that have a negative spillovers are not considered as part of an eligible expenditure. And then we apply something that we call the Pareto principle, but practically is we are only including budget line items that belong to ministries that have the most of the budgets. And I will explain that later, but it's because we want to have enough space to be a recurrent issuer in the market. And finally, and this is one of the most important ones, is we apply social expenditures are filtered by using a social gap index. This is important because we brought into these criteria a geospatial criteria. What means a geospatial criteria is that we are only including in the impact report all the eligible expenditures that were done in specific municipalities, and those specific municipalities are the ones situated in the southern part, and that was actually by decree of the president. That the president enacted a list by decree of what should be the municipalities that should be prioritized, and the SDG, and we managed to arrange that this list has to have around an 80 or 90% correlation with the eligible SDG expenditure. So the geospatial criteria, specifically on those poor municipalities, are what also was a special feature for the investors in Europe. So the framework only includes 11 of the 70 SDGs categories. I'm not gonna walk you through all of them, but the framework also brought together two criteria. And there are two specific criteria in the world. You can issue a green bond with a specific criteria, and you can issue a social bond with a specific criteria. In the framework, we included both. So what we want to do, actually, and thinking beyond this administration, is that whatever are the priorities of the administration, in order to pursue sustainable growth any administration should be thinking on a mix of both policies, green and social, in order to take Mexico to a sustainable growth path. And I think that's the main contribution of this SDG, because issuing this bond in the European market, it wasn't only an exercise of transparency or funding exercise. It increases the commitment of the country in order to report to the investors that actually that we are devoting budget for these projects, and that these projects comply with the international criteria for green and social bonds. And that's actually the main reason why this is called sustainable. It doesn't only include green criteria, but sustainable, but a specific focus on trying to close social gaps. So what were the financial results? And I'm starting to, I will start closing my presentation to go into Q&A. Well, we issue a seven-year bond. The tenor is 7 years. Here you have the UMS yield curve. The UMS is the United Mexican State. That's usually as Mexico is known in the international markets. And this is the euro market, or yield curve in the euro market. If you see for each of the years or the tenors, you have a specific yields or spreads. So what is important is, the longer you issue, probably you will have to pay a higher yield. So that's why this is a positive slope curve. What is important about the sustainable bond is that, I mean, we have a lot of references in the European market with the traditional UMS. Theoretically, any sustainable bond should be priced below the curve because of the impact that this bond is related to, specifically in the long term on the sustainable growth. So it is important because that there should be a price differentiation between a traditional bond and the sustainable bond. So if you see the result of pricing of the inaugural SDG bond for Mexico, it fall below the curve. So in terms of pricing, we did achieve a lowest price with this bond. And also this should be theoretically also expected in order to be more resilient. This should be funds that should be more resilient to volatility impacts like the one we saw with the COVID. So engaging in being a recurrent issuer of sustainable bonds also should be thought as a strategy for not only for diversifying the investor base, but also to secure access to specific market or to specific specific sources of funding. So, so we issued a 750 million euro bond, 7 years. The yield was 1.6. We have a negative new issue concession. Let me open again a parenthesis for those that are not familiar with how we float a bond in the markets. I mean, usually we tap very early in the year. Mexico opens the markets traditionally in January. We issue a US bond probably in the first week. Actually, this year in 2020, we issued a US dollar bond in the first week of January. In the second week, we issued a euro bond. But with those transactions, we raised around 80% of all the redemptions that we owned to the market for this fiscal year. So the SDG transaction was only designed to start putting sustainable reference and to initiate a process of price discovery in the markets. But let me walk you to how the issuance are done during one day, and they are done with an auction. So in the US dollar market, we start the transaction around 5 or 6 a.m. But in the euro market, we start the transaction around 1 and 2 a.m. in the morning. No? So we are practically starting to work all night. We have a go-no-go with the banks, a go-no-go call with the banks. We read the markets, we read the sentiment of the markets, and we decide if we should be tapping or not the bond that day. When the market sentiment is not adequate, probably we will try, let's say we try this on Monday, then we will try this on Tuesday. If it's not right, we will try this on Wednesday. And we don't traditionally tap any market on Thursday, on Friday. Why? I don't know. It's kind of a tradition. We don't want to we don't want to go to the markets when we are close to the end of the week. So probably we will postpone the issuance for next week. But this is very challenging because if you don't go out to the market in Monday or Tuesday, by Wednesday you probably have 2 days without sleeping, no? And once you start the transaction starts around 2 a.m. and it closes for around 10 a.m. In the morning. And it started with a sovereign issuer launching initial pricing. So we said this is the price that we want to start the auction. The auction starts. At some point, we launch what is called a guidance price. The guidance price is a signal in which we indirectly said to the investors, we are comfortable with the order book and with the bids, and we already feel comfortable to start closing the deal. They can take two decisions. They can withdraw the bids that they put because they think the guidance price is low, or they will keep their bids on the book order. And then we close the deal with what is called the landing price. We said this is the final price. We are taking all this money, and this is what we are paying. We leave around 15 minutes to 20 minutes for the investor to say if they remain, or if they don't want to remain, they withdraw the order bids. So this SDG bond, we were targeting 750 million euros. We have a bid to cover demand of 6.5 times. And this was a highly surprise for us. Usually we have a demand from between 4 to 5 times. This is one of the highest demands that we have seen in this in the UMS instruments in the international markets. The coupon that we're paying for this bond is 1.35%. It is the second lowest that Mexico has achieved in the euro market in its history. And what is more important is usually we have very traditional investors, BlackRock, PIMCO, Bluecrest. But this time we wanted actually to target new investors. We managed to capture 78 new investors. If you think, I mean, Mexico has a long tradition of building their yield curve and tapping the markets, especially since the 1995 crisis. And we have a strong investors base. So we managed around 300 investors buy our instrument once we tap the markets. So we managed to include 78 new investors that weren't buying Mexican instruments before. And 44% of this, of the allocation of the bond was allocated in ESG accounts. This means that these were investors that weren't buying, not only weren't buying Mexico before, but also they devote their money only to buy those instruments that are linked to SDG criteria. So this was a huge success for us when we closed the transaction in the euro market. I'm not going to spend much here, but the eligible expenditures breakdown for this bond is the SDG 2, 3, 4, 8, 9, agriculture, health, science, work and economic growth, and transport and communications. The framework is flexible enough that we can introduce new SDGs and new expenditure lines as long as we have an impact report linked to that. So our commitment with the investors community is that in next September 2021 we have to issue the impact report. And now let me come back to what is the space for Mexico to be a recurrent issuer of sustainable bonds. Eligible expenditures, which is the green area that you see here in the graph. Sorry, no. This is the other way around. This is the green area are the redemptions that Mexico has to pay on the following year. So in 2022 we have to pay close to $5 billion, 4.8 to be precise. But we have eligible expenditures of around $14 billion. So that means that each year we have eligible expenditures that are constant in the budget that allow us to issue bonds related to those eligible expenditures. And that would be enough to actually roll over all our traditional UMS bonds with sustainable bonds. We don't know if we are going to do that yet. And we are discussing and debating internally that, but probably next January, when we tap the US dollar market and the euro market again, we could be able to do the complete rollover of the traditional bonds with sustainable bonds, or at least we should do a tranche of them. Now, sometimes we issue at 7 years and 14 years or 20 years. So one of these tranches can be considered only SDG. We also tap the samurai market. We don't tap the samurai market in an annual basis. We practically wait 1.5 year and one and a year half. We leave a 1.5 year half period to tap the samurai market because it has a smaller size. And we are still building the curve in the samurai market, but we already have a very nice discussion with the Japanese banks and some investors. We are gonna initiate a roadshow next week, a virtual roadshow in Japan with Japanese investors, and they are very interested in buying the SDG bond. So at some point in next year, probably you will see also an issuance of these with these characteristics in the samurai bond. And this could also, what we are aiming here is that we will have references in the dollar market, euro market, and the samurai market for all the Mexican firms to issue or to implement their funding programs in these markets. So let me start. I'm closing my presentation here to allow for a Q&A section. Just looking forward, or what's gonna come forward next is that we're working, and we are considering the sustainable bond as a first step. We are practically promoting a financial sustainable agenda from the Ministry of Finance, and we are working in two main axes. The first one is we are promoting a sustainable financing ecosystem. So what we are doing is, once that we have created the framework and we already start putting references, what we will expect is that at least in the domestic market, we should be promoting sustainable issuance on local players. So 2 weeks ago, we saw the first one. One of our development banks issued a gender bond. FIRA issued a gender bond linked to the SDG link to the gender gap. And we are also presenting the framework. We already received a lot of interest from some national governments that want to engage also in linking their debt instrument with the objectives that they already have for their specific states 2030 agendas offices. So what we are aiming now is that we want to create this ecosystem. We want to develop the sustainable development market in Mexico. And probably for the following years, we are gonna push hardly in trying to develop this market, specifically from the Ministry of Finance in Mexico. And the second one is we're working in a sustainable taxonomy. What is important here with the taxonomy is that, as I mentioned very early on the presentation, on the beginning of my presentation, is that we want to bring risk sustainable criteria into the financial sector. We have an important take as regulatory authorities. We work very closely with the central bank, and the central bank has been pushing to an agenda to streamline green criteria in the financial sector. Now, private banks have already adopted a series of principles on green taxonomy. But what we want to do is that we should be including sustainable taxonomy. The green taxonomy was born in advanced countries, mainly in Europe. So they are not facing the same social gaps that we're facing in Mexico. So what we decided is that we should be pushing forward in order to go beyond the green taxonomy and try to have a sustainable taxonomy. And specifically, we want to address gender gaps in the financial sector. So we want not only to streamline green criteria, but also some social criteria related to social impacts of the projects that are funded by the financial sector. And let me just probably start closing here with a reflection of why the financial sector should be playing a key role in the sustainable agenda. Because from the Ministry of Finance, what we are trying to do is that all of the development banks should be adopting ESG criteria in order to either buy instruments or to issue instruments. And also we are pushing forward, we are pushing the agenda with the Afores, with their pension administrator, resource administrator system, in order to also have a specific targets to buy ESG instruments. And this is important in order to create an ecosystem, but also it is in line with what is expected, what is the expected role of the financial sector. I mean, we will expect that the financial sector, since it's the main channel for capital mobilization, that capital should be mobilized under these specific criteria, green and social, ESGs. So that's why the importance of the sustainable taxonomy. I have the honor to be the chair of the Sustainable Public Finances Committee, together with the Central Bank. We're gonna have the first session next week, but this is gonna be the first step to work on bringing these criteria on the financial sector. So we're working internally on our house, trying to create this ecosystem, and we're trying to bring this to the financial sector. And specifically, we want to address gender gaps, like salary gaps, salary gaps, wage gaps, and inclusion gaps. And then I don't know why this is here, but well, this just to close, this is very high. This was a very well-recognized transaction in Mexico for Mexico. I mean, we listed the transaction in the London Stock Exchange, and they invited us to the open market ceremony. They invite everyone, but we feel very happy to be invited also. But what is important is the NASDAQ, when they saw the issuance, they invited us to be part of the Sustainable Bond Network. And they have a nice projection there in Times Square with the Hacienda logo, etc. The UNDP also was recognizing the transaction, and they congratulate Mexico. But specifically, and I want to probably start stopping here, the UNDP role does not end only on providing an opinion. They will help us, and they will be with us designing the impact report for the investors. And that's the second important role of the UNDP. Also, the UNDP is using this bond as an example for other economies if they want to engage in linking their financial instruments with specific sustainable development objectives. So we feel very happy with the result and the outcome of the transaction. And I wanted to include also, so I wanted just to introduce you the whole team that worked in the transaction. From left to right, you will see the communications team, the legal team, the front office team that reads the market, that actually conducts the issuance in the market. You see also the project finance team that structured the framework, and that also is going to be responsible for designing the impact report. So that's practically all the team that devoted practically 1 year to issue this SDG. So thank you very much. I'm really happy to answer any questions that you have, or comments or suggestions, whatever, are highly welcome. Thank you very much.
Thank you, Gabriel. We are very happy to have McCourt's alumni here. Thank you also for the detailed explanation about the Sustainable Development Goals bond in Mexico, and to share the story behind the creation of the first sovereign SDG bond that could also be replicated by other countries. Now is the time to emphasize the SDGs, and this is a clear commitment from Mexico to finance them. I am going to open the floor for questions. We are going to have some rounds of 3 questions each. We have some questions that some students sent in advance, but please send more questions through the chat. The first 3 questions are from Santiago Mayoral and Oton Balcázar, and are the following. First, how does the vision of issuing more sovereign bonds for sustainable development goals contrast with the Mexico's current aggregate governmental policies toward achieving the SDGs? Second, in specific, how do concerns about the current administration, massive resources spill out to Pemex, boost fossil fuels refinery, and attempts to strengthen CFE at the cost of renewable energy producers in Mexico align to the SDGs? Third, of the sovereign and sustainable bond resources, will the state governments have access to those resources by any means? And if the answer is positive, will there be operating rules?
Yeah, well, first of all, thank you for your questions. And let me start with the last one. No, the states governments do not have access to these resources. These resources are devoted for the federal budget. Let me probably give you a very brief description of how this works. We include, I mean, all projects related to the SDG were going to be carried out either we issue or not the bond. So the bond does not fund the projects. The SDG or the framework, what allows Mexico is to have access to investors that are putting the money in these specific bonds. But there's no a link, a direct connection between projects. So practically these bonds it works as a traditional UMS that is floated on the market in order to finance the budget. Now, second, if this contrasts with the vision of the government, I don't think it contrasts. I mean, Mexico reaffirmed the commitment of the 2030 agenda probably 1 or 2 years ago. We had been working, not myself, but the Mexican government has been working a lot of trying to improve coordination with the subnational governments and with the federal government, as I mentioned, with this office. And that was practically the reason why we wanted to include the sustainable approach instead of a green or a social bond. At some point, we were discussing if we should be issuing only a social bond or a green bond. But we decided to have this flexibility precisely because we want to inherit to the next administration the institutionality and the commitment with investors that we were going to be mixing two policies, the green and the social one. And we are allowing the flexibility for the next administration to have the priority that they want. No? So for this bond, we are including some social eligible expenditures and some green expenditures. There are some projects included in the bond, such as BRTs, for example, the bus rapid transit projects that we are implementing. There are another ones related with some the renewal of hydroelectrics. And then probably we will have the discussion, I think that's the third question that you are trying to aim, is that if this should be antagonizing with some of the message that had been received in the media about energy policy in Mexico. So to close the first question, this is not for the states. And the states, actually, what we would like to do is that the states can issue their own sustainable bonds, and they will be linking this to their own budgets with the SDG approach. And then we don't think this contrasts with the vision of the government. We are including green and social bonds and social criteria here that are already in the budget and that we're going to be carried out either we issue or not the bond. No? So just to be clear on that. Now, in terms of energy policy, which I'm not the expert and I'm not working in the energy ministry, but I do participate in most of the boards in Pemex, CFE. I guess we're in a point in which it's not an inflection point. It's a point of reflection, actually, because of the lack of planning. And I don't like to pass judgment on past administration, but there was a lack of planning, and traditionally there is a lack of planning not only in Mexico, probably in all Latin America. No? We kind of flexibilized the markets here in Mexico for energy, but we created a lot of imbalances in terms of how we are generating and distributing energy. And just to give you an example, in the west coast of Mexico, we have a lot of pipelines there. We are generating a lot of renewable energy also, but we don't have enough demand there. So the Mexican government at some point, for some reason, and I'm not going to say why, they just issue a lot of licenses there. And we create a lot of energy, but we don't have who to sell this energy. Now, specifically, Baja California doesn't consume that much. And now we have to build, either we build transmission lines or we export the energy. So right now we don't have those investments in place, and we do have a lot of generation, but we don't have the transmission infrastructure. Now the problem there is that using renewable energies as an argument, and also using this as an argument for the transition matrix, well, there were some discretionary decisions that were made in some contracts in which the renewables have priority, but the prices are higher. And the demand is not there. No, so the CFE practically is obligated to buy that energy creation, but doesn't have enough demand on that. Now, having said that, this is an unbalanced problem that we have to solve, and we're trying to solve engaging with the private sector. So some of this energy will be exported to Japan. As one of the private firms that are promoting this exporting gas and energy, and then we have, but also we have a public finance restriction. I mean, we're an emerging economy, we're a transition economy at this point. The Mexican public finances still rely a lot on oil revenues, even though there has been a lot of improvement in the last year. I mean, 1 or 2 decades ago, we were depending probably on 30–40% from oil revenues. At this point, we have managed to reduce as country that to probably 15% of all our revenues, but still that's enough in order to have an important shock that the way we saw on COVID-19 when the oil price falls. So still our public finances are highly interlinked with all revenues. So in order to achieve an energy transition matrix, probably we will have to do it gradually, and we cannot do it one day to the other. No, so and finally, if you compare the energy matrix with United States, probably we are very similar. I mean, if I will remember, yeah, I do have my points here. I mean, fossil fuels in Mexico is around 89%, in US is 82%. Renewable are 4%, and US is 7%, and nuclear is 2%, and United States is 10%. So what I'm saying is, we do have two problems here. We need to push for renewable energies. We need to catch again the green path, the green growth path. But at the same time, we have huge social disparities. And what we wanted to address and we wanted to achieve with the SDG bond was that we wanted to increase the commitment to the investors, that we are going to be at least pursuing the achievement of these two policies in whatever is the mixture of the current administration has. And I think that's one of the main achievements of what we did with the SDG. I do have a meeting with my boss here, with Secretary Herrera, but maybe we can take another three questions if you like, or if there's or not, maybe we can close. No, thank you.
Yes, we can have the last round. These questions are from Kishu, Juliana Daga, and Gabriela Tamayo. The first one is, who and how are going to measure that effectively the bond resources will be used to finance projects linked to the SDGs? Can you share some metrics examples? 2, how will the UNDP support implementation on M&E of the standards? Will the organization have a presence with National Council of the 2030 Agenda for Sustainable Development? And the last one is, what are the specific social development projects linked to the bond?
All right. As I said, our bond practically is an ex-ante bond. It's not an exposed. And what this means is that we already have the budget. We already have the projects in the budget. No. So Luxembourg and South Korea will prove that they did the projects. We already proved that before we have the projects, and afterwards we're going to issue an impact report and a use of proceed report. There are actually 2 reports that we have to provide to the investors. So how are we going to effectively monitor that? And that's the reason why it is important to have a strong governance in order to monitor the SDGs. And we have an IT platform in order to do that at the federal level, and we're including the subnational level. Now, even though subnational states are not considering the SDG bond, they are considering in the office of on the monitoring of the office of the 2030 agenda. So in this agenda, in this office, in these committees, the UNDP participates as well. The Coneval, which is our evaluation policy institute, participates as well, and the INEGI participates there. Also, there is a lot of participation of the private sector. And so these committees function as a steering committee. Having said that, that's kind of a monitoring or steering committee on what is the 2030 agenda policy. But in the budget line, we have a specific metrics on physical and financial expenditure. I forgot. Sorry. Expenditures that can be reported as part of the impact report. So all this if you put all these elements together, we should be able to create an impact report of high class, no? And to have a very nice impact report for investors. But I just maybe want to underline what this is the kind of commitment that we did. I mean, personally, I will have to be with investors next year and present these results, no? And so this is very important for us. And the Ministry of Finance obviously is going to be working in parallel to try to effectively that effectively these budgets the budget was devoted for the projects that are eligible. Now, having said that, remember that we are not using this money to finance the projects. The projects were already financed by the budget, and they were going to be executed or implemented either we issue or not the bond. The bond allows us to access to funds that have a specific criteria for SDGs. Now, the second question, what is the role of the UNDP? As I mentioned, they provide first an opinion of the alignment between the budget and the SDG. The UNDP participates in the committees of the 2030 agenda. That's another important aspect. They are observers. They don't vote, but they have a voice. They provide opinions. They are present on all the sessions that in Mexico's 2030 agenda. And also they participate in the M&E. So the UNDP role here, not only for the SDG, but for the implementation of the SDGs agenda in Mexico is very important. And they are highly committed, and we are highly committed with them. So let me very briefly talk about what are the projects or policies that we include in the framework. And I guess this was one of the more fulfilling experiences that I have when I went to for the roadshow in Europe, because, and I hope there are no media here, before, because I was actively promoting this before, all the roadshows practically were devoted to talk about public finances, about the contingent risks of these public finances in Mexico, about the financial sector. Let's say all the traditional financial issues, all the economic or public finance issues. When we did the roadshow, was the first time that we talked specifically about the disparities in Mexico. No, I mean it was kind of enlightening that discussed it in France, because, for example, if you conceive Mexico as probably two continents in which you have very advanced urban areas that you can promote a digital banking solution like CODI, for probably not all of them, most of you are from other countries. We have an electronic platform that we are developing in order to do electronic payments in Mexico, but that can only be implemented in the more urban areas that have connectivity. But Mexico is one of the countries that lag a lot, lag behind in connectivity infrastructure. So at this point, we are having a specific policy to invest or to provide digital infrastructure in the rural areas, in the last mile. No? At the same time, all social programs are going to be disbursed through electronic payments. So they have, before, most of the social programs were disbursed by cash, and obviously that was susceptible to be prone to any corruption, let's call it like that. So right now, the government, the Treasury, is disbursing all the social programs to a debit card. If you think that some of the beneficiaries are in the rural areas and they have a bank account and they have connectivity, at least we have two of the pillars that eventually should help us to promote a more aggressive financial inclusive policy that has to be coupled, obviously, with a financial education policy. But those are the projects that we were able to present to the investors. And once you present the disparities to France, I mean, they were saying, but why are you still discussing about disbursing with debit? For them, they were very, I mean, it was, for us, it's normal. But not in Mexico. People in Mexico does not have a bank account, don't use the financial sector for transaction. It is still a cash basis economy. So I guess these are the specific projects that we're including: financial inclusion, closing gender gaps, all the policies that we are trying to push on closing the gender gap. Also, all these projects that involve the community participation to rebuild infrastructure, and one of the policies that we presented to the investors in Europe was the building of rural roads in Oaxaca that are built by the communities, and this and you were saying, well, this is only a road. Well, it is a road, but it means it reduces pollution. It reduces. It has a lot of some other impact, environmental impact, but also social impact. So we are including financial inclusion, social inclusion, poverty, and all those policies that right now we're trying to build in the new administration. So the framework actually is public. If you like, I can provide you with a link, or if you want to go to the Ministry of Finance webpage, you'll see there in the Investor Relations Office a link of the framework. It's public. We are actually very actively promoting it. And also, well, we can have a follow-up session when we have the impact report. No? So I have to leave. I'm very happy to be with you guys, and very happy to at least virtually come back to McCourt School and Georgetown. I have very good memories, and I have a lot of fun there. Thank you very much.
Thank you very much for your time. I'm going to leave the floor to Juliana Daga for the closing remarks.
Hey, thank you, Majo, and thank you all, and especially Gabriel, for taking the time to have this conversation with students and our broader community. As Hoya Fellows, we are very happy that you agreed to participate, and we wish you the best in the coming of this project. Often in McCourt, professors try to help us think differently or out of the box to solve policy issues, and I think this initiative is clearly an example of that. So we are waiting for the impact report in a couple of weeks. I also want to thank our dear alumni, Diego del Pilar, who made the connection, who helped us bridge our interest as a student organizations and a real policy maker. So thank you, Diego. And without intentions of delaying you further, and on behalf of the Latin American Policy Association, LAPA, and the Georgetown University Graduate Mexican Students, BUGAMS, and the Financial Inclusion Group, TIG, we thank you all for your time, and we hope to see you very soon. Thank you.
Thank you. Take care. Cuídense. Gracias. Saludos.